I guess to begin with, I'm going to start with you, Todd, and then Huw and Jonathan, because I kind of wanted to get a perspective around what you're seeing around the world, particularly obviously starting in Europe. And from my side, I got a very interesting report the other day from a company called SaltEdge that has been testing 2,000 different API initiation experiences across Europe in 31 countries. And their report came out and said that most countries are pretty good at accepting open API requests to the banks. UK leading, in fact, 97% of UK banks accept open API requests. But response rates are dramatically different in that Czech Republic, for example, are in the top 10 countries of Europe, but the response rate is only 30%. So you can send a request, but you don't get anything back, which is pretty useless, really. Todd, how do you see things?
The UK, the deadline was January of 2018 for the CMA9 banks to have APIs. 50% of those banks missed the deadline. After they came live, it was a full year after that until data APIs were stable. It was a full 18 months until payment APIs were stable. But now there's 400 million data transactions, 400,000 payment transactions in the UK per month. So I'd say that's a model that the rest of Europe is going to follow. Poland then had the second deadline, and Poland is now the most available and the most stable second country. And then we do also measure the availability of APIs in all the other countries. Germany, the Netherlands, Sweden is probably next. But again, if you look at the deadline for those banks was only 8 months ago. And if you apply the experience in the UK over that, half of them missed the deadline. We did a study as of September deadline, only 15% of the banks were fully compliant in production at that point in time. But across the board, what we're seeing right now is really from the merchant redeeming to the bank responding is an 87% success rate. And when you measure that end to end, it's a little bit lower. But my point, Chris, is sure there's still some difficulties in the networks outside of UK and Poland, but banks aren't slowing down their production of APIs. They are improving and they are stabilizing. They are being rigorously tested. And so I believe it's just a matter of time, like in the UK, that it will become a viable alternative network.
And just before I come to Huw, from mid-March, when Europe really got into the sort of depths of this pandemic, have you seen, Todd, significant interest change in the banks adopting open banking and APIs, or is it very much that they've just tried to keep the doors open and this is still on the back burner?
So the banks have not slowed down their complying to the regulation, and they continue to produce their APIs. Had this happened 6 months earlier, we might be in a different situation. But all the banks were live, and now they're working out on testing them. So we do see APIs are live and operational. Volume is starting to happen. What I do see starting to slow down is many of the banks were looking at the commercial APIs. So how do we go beyond the bare minimum of compliance? How do we look at enabling more sophisticated payments like variable recurring payments, subscription payments, sweeps, installments? I have noticed a bit of a slowdown of banks moving forward on that project. But interestingly, so we have 2 banks that we enable them to take a PISP offering to market. So that we basically white label token end-to-end to offer a new capability to their corporates. And both of those banks had to re-justify the project in this environment. And both of those banks re-justified it as strategic at this point in time. So kind of tells you that as to comply, they're sticking with it. To create a new offensive proposition, they're staying with it. To move beyond the bare minimum capabilities of the compliance, I've seen a little bit of slowdown on.
Thanks, Todd. Huw, again, you heard the questions I was asking Todd. You can probably add some more insight as to what you're seeing. And equally, specifically, I guess, what are the areas where open banking is really making the biggest bang for the buck in terms of impact?
Yeah, so I guess just to build on some of the points Todd was making. So I do agree. I think there's a marked difference today between some of the market metrics and the performance we're seeing in UK versus mainland Europe. I think that's partly because of the UK started earlier on the journey. The CMA order started earlier than the PSD2 implementation. I think it's also down to the way the market approached implementation. So the industry worked together to create a common standard that was implemented more effectively. Across Europe, you tend to have much more fragmentation of standards. So it's harder, I think, to integrate to all of the banks across Europe. So further ahead, I think with a more coordinated implementation approach, that all made a difference, and we are seeing it in terms of the real usage numbers in the UK. So API call volumes grow sort of broadly 30 to 40% month on month. So the market usage doubles every quarter. Now, a lot of that's account information calls, but as we said, as Todd said earlier, and as we talked about, we're starting to see the real payment use cases start to become much more visible at the moment. I completely agree with Todd though. So it's important to understand we are still at the kind of end of the beginning, and the benchmark to date has been what has the regulation asked for. So a lot of the APIs are delivered to meet those minimum requirements. Now, I think as a much more commercial market starts to build on top of those APIs, as banks start to create more functionally rich APIs to enable, as Todd was saying, the variable recurring payments, which is one of the things we've been working on developing at OBIE, identity-based propositions, more options around that authentication user experience. It doesn't have to always go back to the bank, and put a commercial framework around that. I think we'll then see the economics and the demands of the demand side drive a significant uptick then in terms of the availability and the performance and the functionality of the bank APIs. Interestingly, I guess the question started around what's happening around the world. I think many of the markets are now looking at, so those markets that are taking a regulatory approach are looking at how do they really leapfrog what's happened in the UK and Europe, but also look at some of the learnings from the Asian markets. And I'm sure Jonathan will have some really interesting views. But Brazil, just a week and a half ago, the central bank, I thought very interestingly in the context of COVID and central banks being under a lot of pressure to focus on economic recovery and all of these things, went full steam ahead with rolling out the open banking legislation. I thought that was a really bold and brave move, recognition that a good digital economy is a real asset at this point. They, I think, looking and taking a lot of learnings from the markets in the UK and Europe. So it'll be a much broader scope than the UK. So all financial services product types, not just current accounts and payment accounts, with concepts of reciprocity to drive a more open and commercial market. So I think we'll see the market grow differently. And what we see, if you look at, again, places like India, okay, it isn't called open banking in the same way, but the UPI model, I mean, that's 4 years old now. We're seeing over 1 billion transactions a month pretty consistently. It's got through some of those first implementation hurdles. There's some common standards being applied. There's some real big demand players with some great use cases and great user experience. And we're seeing there the volumes fly. So I think there's some certain characteristics that have made the UK a little bit unique in Europe. But I think there's a next stage, which is now that sort of commercial layer that will really unlock a lot more potential.
I mean, I'm a big fan of what India's achieved. And I saw a stat the other day. I can't remember the exact numbers. It was something like 2010, 36% of Indian citizens had bank accounts, basic bank accounts. Now it's 82% in 2018. So just in 8 years, thanks to the India stack and the things they've been doing with technology, it's an incredible story. Jim, maybe we can build on the themes we've started with, but specifically talk about it more from a cards and payments perspective using mobile services. I mean, what have you seen both from an open banking perspective, but also from card within app purchases changing behaviorally in the last couple of months from the stats that you're seeing?
I'm not in a position to comment on card within app. So I'm afraid I don't sit in that part of the business. what I would say is that whether you're looking at open banking services, or for that matter, our own pay by bank app capability, the pace of conversations, if anything, has accelerated over the last period. Whatever the reverse is of people hunkering down and kind of battening down the hatches, whatever analogy you want to use, quite the opposite of that. So I think I'm seeing, see people leaning into the digital opportunity as a whole when it comes to the supply chain. In terms of activity, real customer activity, frankly, we're still early stages. As Huw said, the UK is growing rapidly in terms of usage, both payment and non-payment use cases. Mainland Europe has some ways to go to catch up, frankly. But equally, if kind of looking at, we've touched on India and China. Arguably, after India, perhaps the US is the world's biggest open banking market, and it's done that without the benefit of material regulatory intervention anyway. And the data there is quite clear. Things like, I guess because of interest rate changes, data on remortgaging is grown significantly. And one of the key ways that lenders can conduct their underwriting processes in the States, complementing that which they get from the credit reference agency community, is using open banking data. And we're seeing significant growth of that, catalyzed by interest rate changes for sure. And from what we can see, same sort of stuff is happening certainly in the UK. That's obviously not a payments transaction, but it is using the open banking rails, the AISP usage. And I think that's kind of almost natural behaviour in response to something which happens to have been catalysed by the crisis.